Ever wonder how people actually make money in the share market, or why companies even sell shares in the first place? Whether you're dreaming of becoming an investor or just trying to figure out what all the hype is about, this is where your journey begins. Welcome to Share Market Basics to Advanced, Episode 1. By the end of today's video, you'll understand exactly what the share market is, how it works, and why it matters for your financial future. This series will take you from zero to hero in the stock market, step by step. We'll cover everything from the absolute basics to advanced strategies used by real investors. So, if you're serious about building wealth through investing, hit that subscribe button and let's get started. First things first, what's a share? A share is simply a small piece of ownership in a company. When you buy a share of Apple, you're not just betting on the stock price. You literally own a tiny slice of Apple Inc. Companies issue shares to raise money. They might want to build new factories, launch new products, or expand into new markets. And instead of borrowing all the money from banks, they invite the public to invest in them. In return, investors hope to profit as the company grows. The share market is simply a platform where people buy and sell these shares. There are two main markets. Primary market, where companies sell shares to investors for the first time. This is called an IPO, or initial public offering. Secondary market, where investors trade shares with each other after they've been issued. Primary market is where most of the daily action happens, on stock exchanges like New York and Share-Paying and NASDAQ. Prices go up and down based on demand and supply. If more people want to buy a stock, its price goes up. If more people want to sell, the price goes down. Simple, right? Well, not always. That's where market psychology and news come in, but we'll get to that later in this series. Now, why should you even bother learning this? Because the share market is one of the most powerful tools to grow wealth over time. Historically, well-diversified stock investments have given higher returns than savings accounts, fixed deposits, or gold. But, and this is important, with higher returns comes higher risk. That's why understanding how the market works is so crucial. If you just jump in blindly, you're basically gambling. If you learn the rules, you're investing. The share market isn't just buyers and sellers. There are several key players. This means that you and me. This means institutional investors, big funds, insurance companies, mutual funds. The share market stockbrokers. They give you access to buy and sell shares. The share market regulators, like SEBI in India or CPAC in the US, making sure everything stays fair. The share market makers and analysts, they provide liquidity and research to keep things moving smoothly. Understanding who's in the game helps you see why prices move the way they do. Let's say there's a company called Chai Time Limited. They need 10 crore rupees to open 100 new tea shops. Instead of taking a huge loan, they issue 10 lakh shares at 100 rupees each. Instead, the primary market, investors buy directly from the company at 100 rupees. In lowrider, in the secondary market, if Chai Time becomes super popular, everyone wants its stock, so the price may rise to 150, 200 rupees, or more. Early investors make a profit, but if Chai Time does poorly and no one wants the shares, the price can drop and investors lose money. That's why research and understanding are critical. So that's your crash course on what shares are and how the stock market works at a basic level. In episode 2, we'll cover how to actually get started, opening a demat account, choosing your first stock, and understanding how trades happen step by step. If you found this helpful, give this video a thumbs up and share it with a friend who also wants to learn investing. Remember, building wealth isn't about luck. It's about learning how the game works and playing it wisely.